Being smart doesn't guarantee wealth. In fact, some geniuses with six-figure salaries are broke or barely growing their money, and it's not lack of intelligence. In fact, your IQ could be your wealth's worst enemy if you fall into these hidden mental traps. The real reason? Hidden psychological traps that silently drain cash without them even noticing. In this video, we'll uncover the mental mistakes even smart people make, explore real-life examples, and reveal practical strategies to break free and finally make your money work for you. Let's dive in. First, let's look at the trap that quietly destroys fortunes before most people even notice. The overconfidence trap. Being smart can actually make you overconfident, and overconfidence is costly. Think you can outsmart the market? Think again, this one mental mistake costs millions every year. Even highly educated people often believe they can outsmart the market, investments, or financial systems without proper planning. They may dismiss advice from experts, thinking their knowledge is enough. Example: a software engineer with a six-figure income invests in a single hot tech stock based on intuition rather than research. The stock crashes, wiping out a large portion of their savings. Overconfidence creates blind spots, making smart people vulnerable to big financial mistakes. Imagine putting your hard-earned savings on a single gamble and watching it vanish overnight. Fact: studies show overconfidence leads to excessive risk-taking and frequent trading, which reduces returns by up to 25% over the long term. .com. Tip: acknowledge your limitations and use structured financial strategies instead of relying solely on your intellect. Overconfidence often pairs with another silent trap: procrastination. Have you ever been too confident with your money? Drop a yes in the comments if this has happened to you. And that leads perfectly into the next silent killer: the procrastination trap. Smart people often know what to do, they just don't do it. Knowing what to do isn't enough, the clock is silently ticking against you. Procrastination around financial planning is common. Even if someone knows they should invest, save, or budget, they delay action. The result? Missed compounding, late retirement planning, and financial stress. Example: consider a professional who knows about index funds but waits years to start investing. By starting just 5 years later, they may need to invest 30 to 40% more each month to reach the same financial goal. Tip: create automatic investments and savings plans to bypass procrastination. Action is more important than perfect knowledge. Another trap that holds smart people back is an obsession with security over growth. The security obsession trap. Playing it safe might feel smart, until inflation quietly erases decades of your wealth. Highly intelligent people often overvalue security and avoid risk entirely. While caution is good, avoiding all risk also avoids opportunity. Example: someone invests only in savings accounts or government bonds while ignoring higher-yielding assets like diversified stocks. Inflation slowly erodes their wealth over decades, leaving them financially stagnant despite their high intelligence. Fact: over the past 50 years, the S&P 500 has averaged 10% annual returns, far outpacing inflation. Avoiding growth-oriented investments may feel safe but guarantees missed wealth creation. Tip: balance security with growth. Keep an emergency fund but allocate a portion to higher return investments. Even with confidence, action, and calculated risk, many smart people fall into another subtle trap: lifestyle inflation. The lifestyle inflation trap. Earning more doesn't always mean saving more. More money in your pocket can secretly make your net worth shrink if you're not careful. Smart high earners often increase their spending as income rises. Expensive cars, luxury gadgets, and bigger homes seem like deserved rewards, but they consume cash flow that could be invested. Example: a young executive doubles their salary but also doubles monthly spending. Despite earning more, they save less than before, keeping net worth stagnant. You double your income, but by next year, your net worth hasn't grown an inch. Sound familiar? In fact, behavioral economists call this the lifestyle creep problem, and it's a major reason why smart, high-income individuals remain financially limited. behavioreconomics.com. Tip: increase savings proportionally with income and automate investments to prevent lifestyle creep from sabotaging wealth. If this one isn't draining your wealth, the next one almost certainly is. Analysis paralysis. Smart people overthink everything, and in finance, indecision costs money. Researching endlessly sounds smart until opportunity passes you by. Having a lot of knowledge can be a curse. Smart individuals research endlessly, waiting for the perfect investment, but opportunities pass while they hesitate. Example: a highly analytical investor delays buying an index fund because of minor market fluctuations. By the time they act, prices have risen, reducing long-term returns. Fact: market timing rarely works. Missing the best 10 days in the market can slash decades of gains by over 50%. Tip: focus on actionable strategies like dollar cost averaging and ignore minor market noise. Beyond behavior, another trap is the overcomplication trap, making money management too complex. The overcomplication trap. Smart people tend to over-engineer finances. Complexity doesn't equal intelligence. In fact, it might be killing your returns. From complex spreadsheets to multiple investment accounts and exotic strategies, overcomplication creates confusion and decision fatigue. Confused investors often delay action or make mistakes that cost money. Example: someone manages 6 brokerage accounts, 10 mutual funds, and multiple retirement accounts without a clear plan. Instead of growing wealth efficiently, they waste time and pay unnecessary fees. Tip: simplify. Use consolidated investment accounts, limit funds to 5 to 7 diversified options, and automate recurring investments. Efficiency beats overanalysis. Even with knowledge and simplified systems, there's one trap that sneaks in silently: the comparison trap. The comparison trap. Watching others can be deadly. Here's why peer pressure could cost you more than you think. Social comparison leads to poor financial decisions. Trying to keep up with a friend's lifestyle, flashy investments, or perceived success can create spending and risk-taking behaviors that destroy wealth. Example: seeing friends invest in high-risk cryptocurrency or luxury assets, someone might follow along without proper understanding or strategy. The result? Losses and frustration. Fact: behavioral studies show that people who constantly compare themselves financially are more likely to spend impulsively and take uncalculated risks. Hokia.com. Focus on your own financial plan and metrics. Wealth building as personal peer pressure is a hidden cost. You now know the traps, but here's the good news. Awareness plus action can turn your smarts into real wealth. How to break free from these traps. Knowledge alone doesn't create wealth. Awareness, action, and disciplined habits do. Set clear financial goals. Write down your long-term wealth objectives: retirement, passive income, or assets. A clear target guides decisions. Automate investments and savings. Remove emotion by using automatic transfers to retirement accounts, index funds, and emergency savings. Balance risk and safety. Keep a liquid emergency fund, but allocate a portion of capital to growth assets. Track and review. Regularly monitor performance and adjust without overreacting to short-term market moves. Continuous education. Read financial news, books, and reports, but act on knowledge rather than endlessly analyzing. Being smart doesn't guarantee wealth. Overconfidence, procrastination, lifestyle creep, and overthinking silently drain resources. The key to escaping these traps is awareness. Disciplined action and a clear strategy. Start small, act consistently, and focus on long-term growth. Your intelligence will finally work for you, not against you. If you found this video valuable, like it, comment which trap you've fallen into, and subscribe for more actionable insights on mastering money psychology and building wealth intelligently. Bonus challenge. Pick one trap today and fix it before tomorrow. Even a small action compounds into real money over time.